sir.
Hey, how are you?
I'm doing fantastic. It's nice that these are starting to work for us. Our cell phones are being good. I got a
That's
screen
good.
up as well. Looks like we're both in this just fine and dandy. It's working well.
That's good. All right.
I know Bartholomew. I've got to get you one of those. We'll do an order soon. We had this fall the money mug. It's only one. It's very rare, and it's gonna go for a lot of money one day on Kijiji or one of those things. But he's been bugging us to get one, so we got to do that soon. Got to get a bunch of them. Who knows? Maybe we'll get some metallic mineral mugs as well. Maybe we'll get a
There you go.
bunch of merchandise out to people because we're not cannabis companies. We're allowed having merchandise still. I
You
don't know
can
if you know
number
about
them.
that actually. Yeah, I
You
don't know
can,
if
yeah,
you're
no, I've got mug
they're
number two, mug number three.
yeah. Exactly. Good evening, Todd. Welcome, my man. Always a pleasure. So, how did the day go today in the world of metallic minerals? Always interesting, I can imagine.
Yeah, no, it wasn't bad. I mean, it's been a bumpy market the last few days. The holidays, thin trading, lots of volatility. But the key ETFs that track the sector, like the GDX, which is the large cap mining companies, has been
Yep.
outperforming the metals. And then the GDXJ, which is the junior index. I mean, they're not super juniors, they're bigger market caps. That has also been outperforming gold and silver. And then the SILJ, which is kind of the junior silvers. So encouraging that we might be seeing some kind of near-term breakout. We've been in a downtrend for the last few weeks, so that'd be great if we saw those things get some traction and go.
And it's just like you said though. This week, I know I was talking to Carl and a few other administrators. It's amazing the chat rooms, even Stockhouse, the volumes. Everyone went on vacation. There's Canada Day. There's July the 4th. It's 30, 40 degrees outside, Celsius for
Wow.
our American followers. It's been hot, so I think a lot of people are on vacation, but it was nice. I mean, you saw a few of the mining plays start heating up today. And as you
Yeah,
said, the indexes are starting to heat up as well. So it's nice that the momentum starts to come in the last maybe week or so, as some of these drill programs have been going for a while for some of these companies that are in their second year or whatever it be. So it'll be interesting
yeah,
when we start seeing results back.
absolutely. Yeah, and it's just an indicator that we're at a low part of the cycle because people aren't attending conferences. They're not that really that interested. So it's definitely another sign, like we talked last week, that we're not at the top of the cycle. There's lack of interest, and people are elsewhere. So
Yep.
these are the beginnings that often, are the prelude to a big move in the market for metals. That's a surprise. So
Yeah. Yeah, and
stay
it's
tuned.
nice, that's where you want to get into things. You want to get into things not only at the beginning of a company, because it's very lucrative, obviously, to get into companies before they shoot up from cents to dollars, but also just in the cycle that we spoke about last week. The fact of we've been in a bear market for a very long time. We've been maybe about a year or so into what you can probably call a bull market now. At least it's not a bear market per se. We're going
Hold
on an
on just a
upward
second here, Brendan.
trajectory.
I've got. Can you hear me? Okay.
Yep, we're all set.
Okay.
Some
Okay.
technical difficulties there for a sec.
Not sure what happened. All of a sudden, I could see you talking.
Yep,
I couldn't hear you.
no worries. Yeah, technology,
Uh,
we're at its mercy.
yes.
Well, for tonight, one of the major things we were talking about, and for anybody who was looking at this, if Carl or Chris could possibly put that diagram in, Carl, it's page
Yep.
5 of the Metallic Minerals investor presentation. We're going to be talking about the resource company development stages and valuations. How to know if a company is brand new and they've just started. It's an idea compared to, okay, we've done some mapping and now we're pretty sure we're going to start drilling soon. Or, you're drilling, you're finding results, etc. We're going to go over that process, and that's where I'm going to leave it off to you and talk about what is the resource company development stages and valuation.
Yeah. No, that sounds good. So that's a good lead. So hopefully we're going to see that get posted here in a second or two to the chat so people can see what we're talking about. But basically, in the mining business, when we look at, it's really important to understand, well, what stage of company am I looking at? We've got the large cap producing miners. I think we talked about it a little bit last week. And in some ways, they're similar to other big industries like pharmaceuticals and biotech, where you've got the R&D going on in these earlier stage startup ventures. And so understanding what stage you're investing in. So if I invest in a Barrick Gold or a Newmont or a Teck, I'm investing in a large cap producing mining company. So now that might be a good investment for me. I may want exposure to metal prices, and those companies, their valuations will rise and fall with the metal price cycle. But if I'm looking for growth, if I'm looking for something that can give me, a 5x or a 10x type, potential return, I'm really looking to get in and invest in something that's earlier stage, a startup that has the potential to be able to find something exciting that the market's going to want to buy, and that's basically going to rise in value significantly. And that's a very different investment. So it's important to understand, if I'm looking at these companies, well, what stage are they really at? So kind of using that analogy of the pharmaceutical biotechs, we've got the producers, and then the stage just before you go into production is called feasibility stage. And this is a stage where you've done enough engineering work and you basically have done the drilling to well define your resource, that at the end of that study process, you start going into the permitting and everything else, and you could go out and potentially a bank or investors or some combination could allow you to build your mine. And so that stage, it trades at a lower valuation than a producer, but it is going to be at the highest valuation kind of in the development stage, kind of like a phase 3 trial biotech, that final stage before going into production. Just before the feasibility stage is what we call the pre-feasibility stage. And so this is the point where we're starting to get enough confidence in the resource that we can start to say we have reserves. Reserves are economic given certain parameters. And so that has important ramifications in terms of the confidence level. And resources are potentially economic. They can be the same understanding in terms of data quality, but the market assigns a higher valuation to reserves than they do to resources. The next stage before a pre-feasibility, in the Canadian 43101 regulatory context, we call it preliminary economic assessment, or a PEA for short. And that's basically your first engineering study. It's done again by a third-party engineering firm, but it's going to be, I've got a resource and I'm starting to put the first economics around my project. Is it open pit? Is it underground? Is it bulk mineable? Is it select mineable? How do I go after these things? And you start to put those parameters around it. And that's when you first get an estimate of the value of that asset. And then basically from that point forward, you start to see a lower and lower discount applied to that ultimate value of that asset.
That's the base. Like, so when you're talking about the stock starting to really build up, when you find that first aspect, that's when you go into market and pretty much say, hey, we've got something here, or we're still fishing. Is that correct?
Yeah, that's at the resource stage. So you've done enough drilling. So there's a couple of, typically I would say, to go from a discovery into something that's a resource, usually we're looking at 2 or 3 field seasons. And so the very first stage, let's step to that very first entry stage, is
discovery.
That discovery stage. And so that's where you've got a team that's put together a package of land where they have the development rights, the mineral development rights, and they've gone in and they've developed some targets and they drill test those targets and they come away with a few hits that the market says, hey, those have got enough contained metal content, so in terms of the concentration of metal, and a wide enough area that is mineable, that the market starts to say, hey, what could this be? And that discovery stage is often where really the big valuation can come into these plays. It's not uncommon, in fact, to see, if you can really get the market excited about what you've discovered with a few initial drill holes, you can see the valuation rise to that 5x, 10x, even higher sometimes level right out of the gate. Now, of course, the challenge is going to be, in phase 2, as you come back and retest it, can you meet the market expectations? And we'll talk about that a little bit, as we start to go through that. But that's the element. It's really all about discovery. Can we take something that was just a package of land Can we drill some key holes, and can we come away with something that looks like it's potentially economic? And if the grades are particularly high or the widths are particularly wide, the market can get really excited about that. And that's where we see these early opportunities for a real peak in value, that sometimes actually we'll see a decline in value as it starts to go through the advanced development stage towards production.
Yeah.
But it's an exciting phase for investors, for sure.
And it's nice because, we have spoken before about how a lot of investors will see that, they'll get excited. The more skilled investors, and we could talk about this in another Facebook Live, maybe we'll talk about it a little bit now, but the more skilled investors, they'll be doing calculations on those findings. How wide, how long, what was the grade, how far are you away from actually starting more drilling? We put all these things together, and you can almost say that those people have an advantage because they know whether to maybe they take some more money out of the company for a little bit and wait for that process to come through, opposed to a
Yeah.
rookie or who doesn't really know what they're doing. It's just, I want to get this to 15 times, and they're the ones left after after the smart people, the educated people, have probably said, you know what, I've made some good money. I'll put it back in next spring or whatever it be when I know the cycle is going to be going again. So it's interesting to know that part.
Yeah, there's some subtleties for sure, in terms of timing. If you've got, that I think for context, you know, if you look out there in the mainstream investor world, people are looking for 5% return. They're looking for 10% return. These are pretty modest percentages. In the exploration business, this is speculation. This is a place where you could see a double, a triple, 5x, 10x, even 100x are not unheard of in this industry. And so your
Wonderful.
benchmarks are a little different than what you're looking at. If you're going to go out and buy General Electric, what am I expecting? Well, I'm expecting it to perform with the market. Why would I go out and buy a mining share? I'm going to buy a mining share because I believe that I'm in the right part of the market cycle, that I'm going to see metal prices rise. I could buy a producer that's pretty stable. That's a lower risk investment. And a balanced portfolio probably has a little bit of everything in it. But if what you're looking for is growth, you're looking for that, I want a 5x, a 10x, then you're
Yeah.
probably taking a more selective basket of companies and you're looking earlier stage. You're saying, I want to put some of my investment money into one of these exploration plays. And if they have the right characteristics, this is something that could really be a home run for me in terms of an investment return.
No, absolutely. And actually, we witnessed that in our Discord chat rooms. If anyone's watching this and you're not in our Discord chat rooms, just make a comment on here, or we'll be posting links later as well, because what we started seeing was of all of the different chat rooms, they're a little bit slower. Like we said, people are on vacation. It's beautiful outside. The mining chat room, though, was actually starting to heat up today because some of these ones, CCW, GGI, they started making their move, MTS, they really started making their moves. And that gets people excited.
Yeah,
That gets people looking at this. Like
yeah,
that, a lot of people that we speak to are saying that we're entering a phase where it's right now we're in the perfect time to get into some of these mining plays because it's that season, and some of these ones are really starting to get going, while others like cannabis and their overall market are being quite horizontal, almost in consolidation mode in the summer. So. Just like you said, though, it's
yeah.
a rush. There's speculation. You can get those 2, 3, 5 times within 1 year. That's what excites me as an investor. I'm a little bit more riskier. That's just my profile. But those are the things you want to be looking for. And the more you know to be able to tell if it's, you're not just throwing a dart, and instead you're actually able to say, this company actually has a lot going for it. If you can do that, plus ride a
Yeah.
little bit of speculation, I think you're in a better boat than people who are just going over there and just following the herd.
Yeah, no, absolutely. And I think right now, as you say, some of the stuff is starting to move. There's gold and silver, the precious metals in general, they trade, they can trade with the main commodities. They can also trade as a counter. They're what's called an uncorrelated asset class. In past down market cycles, if you had 5 or 10% of your investments portfolio in gold exposure, sometimes you could completely not be affected by a major downturn in the general market because gold tends to move inverse to that. It can also
That's
move
where you
along
put
with the
your money
main
into for free.
commodity basket, but that's one of the reasons why historically you may have heard people say, well, you should always have 5 or 10% of your portfolio in gold. It is because when other things are going down, gold is often going up. And of course, if you're a
Yeah.
gold miner, that's going to be good for you and the valuation's going to rise. And as we talked about last week, I mean, we've come out of a 5-6 year bear market.
Yeah.
Valuations have been incredibly depressed. So we're not buying things at the top. Do we know exactly when the turn's going to be? No, it looks like the bottom was put in at the end of 2015. That's a great sign.
Okay.
We've been consolidating a really big move that happened for the first 6 months of 2016. Some of the things went up 300% in 6 months. I mean, that's amazing. And then we've seen basically the market kind of consolidating that, getting ready. The spring is getting loaded. So at any point here, probably a surprise, but not really a surprise if you're watching it closely. We're going to see these things really start to take off. And we'll see it in the indices, and we'll see it in the individual names. We may see some metals do better than others. It's hard to tell what's going to be,
Yeah.
the big driver. But as of right now, it kind of looks like we've got all the metals in sync, moving or getting ready to move out of this consolidation phase. So we're pretty optimistic that this is a good time to be out and telling the stories that we have with our companies.
Now, on that note, two parts. One, those indexes. What we'll do, either if Chris is still watching, to throw them into the comments, or what we'll do is just after this live, I'll put them into the comments really quickly so that you can see what he's talking about. Those are very important to look after. When you're looking at different sectors, there are certain indicators that a lot of people in that sector or space are looking at. And just like you said, you're seeing a bullish trend with these indicators, making it look like we're heading in a certain direction. Well, then a lot of times these stocks follow that. So again, as an investor, whether you're new to mining and resources, or whether you've been in here
Yeah.
a long while, those are the important things to pay attention. It's not always a perfect correlation, but if you see all those are moving, that's a pretty good sign to say, okay, there's a very good chance that we're about to start moving. But that was the one aspect. The second aspect, your actual companies, metallic minerals and Group 10 metals. Where are
Yeah.
they in this development stage? I believe they're almost 1 year off between the two.
Yeah, I mean, in both cases, and then we've got a third company that's going to be in the copper space that's coming. But for metallic minerals, that was the first company that we put together in the group. Our focus, and we'll talk about it a bit more as we kind of go through the various elements that investors should look at. But our focus was to say, with the skills and expertise of the team, we wanted to put together something that had a high probability of success through new discovery, that was focused first in silver, that's metallic minerals, second in platinum and nickel, and that's with Group 10, and then third with the new and up and coming copper company that we're going to launch here later in 2018.
Excited about that one. Lots of articles about that right now about copper, but that's another Facebook Live.
But the idea being that in this case, it's early stage. So this is giving our investors an opportunity to participate in the discovery story. It's basically putting together specialized teams in high-grade vein systems, which is what the silver story is, specialized teams in nickel and copper, or nickel, copper, platinum metal, which is what the Group 10, and then copper. And we've added a few other things. I mean, as we'll talk about, some of these key parameters that you look for in a good development story or an exploration development story are, what is the risk profile of the property that they have? What's the probability that they'll actually be able to go out and drill holes, return grades that look economic, and start to grow those into resources and be able to really drive values? And so in each of the companies, we're basically focusing on areas where you already have past production. And the adage in our industry is the best place to find a mine is nearby one that's already been found, because the geology and the characteristics that made that original ore deposit are going to be similar in that same region. And so that really
it's almost
increases
with
your
all three of your companies. With all three of the companies that the copper one we could talk about another time, because that's a really interesting one, but all three are right around areas that have already been mined, if I'm not correct, if I'm not mistaken.
That's right. That's been a key principle for the way we've done. So we've gone for things that have scale. These can be things that are big enough to be able to have the major mining companies want to buy them if we're successful in what we think we can deliver on these, given a couple of seasons of exploration. they're next to producing mines. That means we have roads, we have power. There's an understanding of, are they
Mhm.
mineable? What's the
Massive.
characteristics? How do you get the metal out? All of those are risk reducers. And that's a key element, when investors are looking at investing in our space, there's 4 or 5 key things that they really want to look at
I know, by the way, if you're
in
watching
terms of
this.
understanding. And the thing we've been just talking about now is the property or the project. And so understanding, where is that project located? Is it near past production? Is it in an area that has a history of discovery and other mines? Because those are things they're going to tell you. The expression that they use is, if you're hunting for elephants, you better be in elephant country. You better be in a place that has what you're looking for. And in the case of hunting for elephants in terms of giant deposits, we want to be in those districts that have a proven record of finding the same deposits, because the geology of our earth, it's not homogeneous. What we find, it's really interesting, is regions that are very enriched in certain metals, and that probably has to do with the original formation of the earth and the crust and the volcanic packages and things that drive these things. But if we look at it, we go, if you look in the Yukon, you've got this world-class history of gold and silver and other metals. If you look in Alaska, you've got areas, again, where this concentration of world-class gold and other metals occur, copper. Nevada, a place where some of the biggest mines in the world for gold occur. South Africa. And so we look around the world, and these metal deposits are not spread out equally. And so a big part of what you're expecting your team that you invest in to do is to figure out, where is elephant country for the kind of deposits you're looking for, and to focus their efforts in that area, because that's going to be key. If you're going to give them your money to go out and say, I'm going to contribute, you guys go out and drill some holes, I want you to bring home some zingers, you're going to want to know they're drilling in a place where there's a reasonable prospect for them to actually
Absolutely.
make a big discovery.
And so that's
And so
one
that's
aspect
that's
is
one
there.
aspect. Yeah, so that's the property aspect. So we kind of, sometimes people refer to 4 or 5 major aspects: property, and so that's what we've been talking about, or project; people, and this is really an important one, especially at the earlier stage. You want to know, do these guys have a track record of discovery? Have they actually found these
And I
things
believe in you
before?
is what you want to prove.
Exactly, because it is a challenging business. We're working with nature. It's not a simple thing to say, go out and find an ore body. These things are relatively rare.
Yeah.
Otherwise, gold and silver and platinum wouldn't trade at the prices they do. And it takes skills that we build up. They say most geologists need to spend 20 or 30 years traveling the world, looking at deposits, understanding the patterns. This is really a pattern recognition exercise. It's being able to come into an area and say, aha, this looks like something I saw in South America or this other district or what have you. And therefore, these were the patterns that were important for finding more mineralization, more ore bodies, stuff that could be grown into those kind of things. So those are all part of the key elements that you want to look at on the property side. And so on the team, knowing that your team that you're going to back has got the experience. Have they found them before? Is their expertise in exploration, or is it in mining? Because these are really different things. If you're going to invest in a company that's building a mine, you don't want the geologist building the mine. You want the very seasoned mine engineer building the mine.
Yeah.
But if you are out exploring for a new world-class high-grade silver deposit, you better have a geologist who's a specialist in high-grade, silver deposits.
And I'll say something about you really quickly, because I know you're a humble man, but you said someone who's looking for 20 or 30 years. You've been in it for 30 years. Someone who has taken a company from a very small valuation to a massive valuation. You've done that as well. So I'll let everyone know that, because I know that you're a humble man. Maybe I won't say it yourself, but I'll say it for you. So that's interesting. That's what caught our attention, Carl and I, when we first met you guys.
Yeah, well, it's a team effort, right? It's never just one person. And I can say that the team we've put together in the metallic group, which is metallic minerals and group 10 metals, is really an exceptional team. And these are people I've worked with in the past at Barrick and at Nova Gold and other companies. And collectively, we've got 4 or 5 world-class scale deposits that we are credited with the discovery or expansion of, during our careers. And many geologists will spend their entire career and never have the exceptional good fortune to work on one of those projects. But this is a team that has had that good fortune. There's kind of a rule in business, there's a rule in life that kind of, in mineral exploration anyways, 20% of the teams make 80% of the discoveries. And so in mining, almost more importantly than almost anywhere else, you want to back those people that have done it before. There's probably a bit of serial luck involved, no question, but partly it's putting yourself in the right place at the right time with the right exploration plan. What is the plan here to find these things that really leads to that serial success of multiple discoveries over time? There does become a bit of a formula to this in terms of what are the patterns we're looking for? How do we recognize what we should be focusing on? What are the important controls? How do we filter the noise to really be able to dive down? And we're fortunate that over the last couple of decades, new tools, like some things like multi-element geochemistry. This is the ability to take a sample, whether it's a rock or a soil, and send it off to an assay lab, and they come back and give us 60 different metals that are in that. Well, that was technology that was developed for the space program. Satellite technology. Well, they started to put up these satellites that were flying all around the world. Well, some of those satellites, they look at certain spectrums, you're able to actually map mineralogy, and you're able to say, hey, wow, I can actually see where these certain kinds of minerals occur, and that allowed us to get, particularly in areas like South America and other areas, to quickly be able to understand where these big systems occurred. And those led to a whole number of discoveries, particularly in the 70s and 80s, of some of the very biggest copper and other deposits that are operating today. Many of those that are now getting old and deep, and new ones are going to have to be found. And so the next crop of technology is going to be employed. We still use a lot of the tried and true approaches to exploration that were used by the old time prospectors. We're looking for occurrences of certain rocks and certain minerals and understanding those patterns. But by combining the technology, your laptop computer, your satellites, your geophysical techniques, mapping, and these other things, we get all these layers of information that we can start to put on top of one another and start to see the patterns and say, this particular area on the property has got 5 or 6 overlapping patterns. That makes it a higher probability if we test there, we might get what we're looking for. And typically, particularly on a big property, the properties that we have for both metallic minerals and group 10, these are huge. These are covering, tens of kilometers of prospective ground. So we're not going to have one target. We're going to have 20 or 30 targets, but we're going to tend to focus on those areas that have more information so that we can advance those that have the best probability of getting there first. Meanwhile, we're going to be doing additional work in some of those other areas to try and bring those other targets up to a level where we can assess them. We can prioritize them. We can say, what's the next ranking? And based on successful results, we then take the next step. And that's really that key, is making sure, we've talked about the 2 things. One, do you have the right property location? Are you looking for elephants in elephant country? And 2, do you have a team that's done it before, that has the expertise and the thing they're out there looking for, and that you can point to and say, you know what, that's a team I want to back. And then the third element on the team, quite honestly, is, do they have significant ownership in the company? You want to know that if you are investing with these guys, that you're co-investing, that they're putting their own money into exploration, into this concept, that they believe enough that they're not just collecting a check, but they're an equity owner. And that's one of the principles you'll see again in the metallic group, owning 25% of the company that we purchased alongside of other investors as part of, the initial financings and then participating in the others. That we have skin in the game. We're there alongside of you, and we believe that our money is going to get grown in that way.
Yeah, and that's good to see.
So I think, yeah, go ahead. Sorry.
No, no, I was just saying that, and that's good to see. Absolutely. It's putting your money where your mouth is. Its
Yes.
success directly affects you personally, not just because your job, your title, it's your actual finances in it. So that's always a good thing to see in any company you're looking into.
Well, and one of the things that you can really tell as some of your folks start to reach out and look at this sector, if companies really believe in what they're doing, they're going to be passionate about it. They love to talk about it. They love to talk about the process. They love to talk about what they're doing. They love to talk about why these targets they think are going to be successful, why they're writing checks in the financings. If you believe in it, it gets in your blood, and you believe in it, and this is what you live, live, dream, and like to be part of. So it's exciting to be, part of the teams that we're doing, and that's the kind of thing I think that your investors are going to want to look at and companies they look at. A couple of
Absolutely.
other things that I think are worth, kind of talking about in terms of talking about some of these things. We've talked about the people, we've talked about the
Yep.
project, starting to talk about some of the other things, kind of moving down that list. And I think one of the things is it is important. We touched on it a little bit, but the politics, the
Yep.
infrastructure, these are really important next tier level. Once you've gotten the, I like the team, they seem to know what they're doing, they've got the right background. I like the project. It looks like they've got some really good targets. They explain it well. They've got a really professional presentation. I can see what they're doing and where they're going. It shouldn't be rocket science. You should be able to see it and understand it. Then you want to start to drill down. One of the things that we saw back in the late 90s was that a lot of areas for exploration that had not been previously opened up. So parts of South America, parts of
Yep.
Africa, and other areas that were quite prospective, but because of political considerations, political risk, lack of a mining law that would allow people to be able to come in and get mineral title and things, they weren't. And then all of a sudden, those areas opened up. The first kind of swath was maybe in the 70s and 80s, and then we saw more of them open up in the 90s and early 2000s. And we saw a rush of the big mining companies, the juniors, into these areas. And there were some initial discoveries that were made in those. A couple of decades into that process, people are starting to recognize, wow, it really is important where that project is. Now, a mine, it's where we find it, right? We can't
Yep.
move it. So that means sometimes you're working in some pretty gamey political terrains. In fact, the risk even that the big companies face is that a change in government in some of those third world jurisdictions can result in loss of your rights. You basically lose the project,
Some
and there's
unfortunate
almost
stories I've
nothing you
heard
can
in the
do about it.
past.
Yeah,
Yeah.
it's really challenging. So one of the things we're seeing in the last short while, which I think has been really encouraging, is we've been seeing a return to first world jurisdictions like Canada. In some of these studies, like the Fraser Institute and other, which are third party groups that go out and they canvass a whole series of criteria, but basically how friendly is it from a jurisdictional regulatory point of view? What's the geologic environment? Can you work there? Is there, is it safe to develop a mine? And these now they're ranking all of these areas, but it's a really important consideration, especially if investors are starting to look at the sector, because they're going to see people that are working in countries they may never even have heard of, and they need to understand what the real political risks are. It's not to say there can't be value. It's not to say that those companies can't go out and find something that creates value, but the team better be very specialized. They better really be plugged into the local political situation. And it is an element of the valuation that the market is probably going to factor in. If it doesn't now, it may do so in the future. And so it's an important element, is kind of, where is my project and where is it? And so if you're in a first world jurisdiction like Canada, particularly in places like Yukon and BC, Ontario, and certain other western parts of the US, these are great areas for mining. They're safe. They've got a proven track record of being able to develop mines. And so that's one element that you don't have to think about as much. The second element that goes with
Hmm.
it is, okay, these guys are exploring. Are they exploring in the middle of nowhere? Is it 400 kilometers from the nearest road? It's not a problem to go out and explore in that area, but you do have to consider that that's going to have an impact on cost. And it's going to have an
Oh, you got
impact
to
on
build
what
the
it
road to get
costs to
out.
do the exploration. And it's going to have an impact on how big does the thing they find, if they do find something, if they are successful, how big does it have to be to make the hurdle of actually being economically viable? And so
Yeah.
those are important, you know, considerations when looking at that. That's going to affect how big does it have to be, and it's going to also affect how much it's going to cost to build it. So, and that's a
Mm.
big consideration in today's world, where some of these mines have capital costs. So that's the cost to build it, that are measured in the billions of dollars. And so those are projects that are so big
A
that they
lot of money.
require only the very largest mining companies to be able to do that.
Yeah.
Um,
It's nice to note
the
again that
last,
you said that your properties are near roads and they're near places that have already been mined. So that infrastructure, somebody built that before you. You can
yeah,
piggyback off of it. That's a key
yeah.
element.
Well, you know, our team has worked all around the world. We worked in Africa and, you know, China and Russia and New Guinea and all these really challenging places, you know, to work
Mhm.
because the geology is good. And so having a choice of where we could focus, we really took, you know, we're in a district that's got a world-class history of finding big deposits, and they're actually mining them. We've got roads,
Yeah.
we've got power. You know you're in elephant country. Two, we're in a place that politically it's mining is welcome, and there's a framework and a regulatory environment that you can develop, and then three, basically going after packages that for one reason or another were kind of off limits, either because they were very fragmented ownership, so it's a consolidation of land, which was the case for metallic minerals, or the
Okay.
case for Group 10, a change in the U.S. Mining law, and then kind of ups and downs of the metal price cycle allowed us to go in and pick up this large package of land, you know, adjacent to Stillwater Mining Company, you know, in that situation. So it's taking advantage of the market cycle. It's taking advantage of these things that we know from experience are going to reduce risk in terms of going in there and actually doing the work, and they're going to increase our probability of finding a discovery that can then translate into creating new value for shareholders.
Yeah. Lots of
Um,
different things to check off when you're looking at
yeah,
this. And funny enough, when you first think of mining, I'll be very honest myself. I did not think of these things when I first thought about mining like years ago when I first started looking into copper and things like that. It's amazing that you really have to pay attention, like you keep saying, the cycle, the cycle, the cycle. It's so important to know where you are in that cycle. But then to think about the management team, think about the politics, think about how much money is it going to be to actually extract it, all these different elements where if you were just throwing darts, you might have threw a dart and everything looked great, but then the political system comes out and says, yeah, you can't mine there anymore. Well, that's a
yeah,
terrible thing to happen. So it's
and
important to know all these.
those are real risks that can happen in the sector. So as you said, the kind of the overriding big picture thing for investing in the sector is, you know, where are we in the cycle? And then you start to dive down into what stage is this project. So I know, am I investing in something that's a discovery? Am I investing in something that's already got a resource and it's being engineered? Or am I investing in a producer? And those are really, those three kind of general slices are different, and you're going to look at different, you know, elements to them. All three of them are going to give you exposure to that rising metal price. That's the good thing. So if we've called the cycle right, all boats are going to rise to some degree. But I guess we're hoping we can get an investment into that top 20% that's going to rise much, much more than the others. And particularly if we're investing in discovery stage names, we're hoping we're going to find those things that are going to be able to drill those initial holes and then follow up those initial holes that are successful with new ones that demonstrate, hey, we've gone from something that really had just conceptual value to something that has actually tangible, you know, value. And I think that probably brings up the kind of last couple of points that I think are important. So we've touched on people, and then the project, and then the politics and infrastructure. And then so the last couple of things are really about understanding valuation, understanding, you know, visibility of the company. Does the market know about it? Because I've seen examples in my own career where you can have a great company, good team, really interesting asset, but they don't have the expertise with the capital markets. How do we take it out and tell the story to
How do you
institutional
get
investors,
excitement?
to
How
get
do they
in front of
know?
the brokers? So there's these companies, even though they can be a relatively small group of people, they have to wear a lot of hats. They have to be able to balance running their company. They have to be able to balance going out and raising money, to be able to design and execute effectively on their drill programs. And they have to do all of that at the same time while they're out also making the market aware of what they're doing so that the market can understand what the potential valuation is as they go from discovery to the next series of stages. And so I think just highlighting a few things on that level, I think that there's almost an opportunity in a way at the early stage of the development cycle where there's not a lot of visibility. So analysts, like you see, cover the big mining companies. Most of those big mining companies have got 5, 10, maybe even 15 analysts that are all diving in excruciating detail. And they're like, well, how much does the mine make? And what's the profits? And what's the leverage? And if the metal price does this or that, what are this going to do? When you look at these earlier stage companies, oftentimes they're not followed by any analyst yet. They're not followed by any newsletter writers yet. So there can be low visibility to the potential value. And so if investors do a good job of identifying these key elements, do I have the right team? Do I have the right property? Am I in a good jurisdiction? And now what's the plan? And there's an understanding of that. That's that opportunity to actually leverage the fact that the market doesn't understand the value yet. And to be able to get in, as you said at the very beginning, at the early parts of the company cycle. And that's really an opportunity. But there is a need as you're investigating these companies and considering them to look at how do they present themselves? Are they tracked? Because if they're tracked by multiple analysts, then that's going to tell you, well, they're a more mature story. That doesn't mean there's not still lots of upside, but you know that the visibility in terms of bigger investors, institutional investors, is probably higher. And then what's their plan for taking that story out and building on it? Look at their presentation. How does the presentation tell a good story? Does it tell you about their shares outstanding so that you can assess, what their share capital structure is? Does it talk about the funds that they have in place and what their programs are going to do? Does it talk about their strategy? Can you follow the maps? These are the kind of things that are pretty readily apparent when you start to dive in and you start to get familiar with what these companies are doing that tell you a lot about the companies that you're looking at.
Yeah, and going on that note, I actually really did like your investor presentation, especially for metallic minerals. One of the things that our group did, Follow the Money Investor Group, created was for the cannabis industry. We had something that tracked, I think it's almost over 100 different companies in their investor presentations. So it's something that I've been paying a lot of attention to because when you see an investor presentation that's very thoroughly thought through, there's a lot of information out there. They're not hiding from anything. That to me personally states that one, you know what you're doing. Two, you believe in what you're doing because you're going to be putting it on paper so anyone can see and dissect it. But also, it just gives you that sense that, you guys have a plan, just like you were saying. And there are so many different graphs and maps of your property in your investor presentation. So if you are watching this and you haven't seen it yet, I do highly recommend you can find it on metallicminerals.com. I believe there's a hyphen in between the two of them. And I've also put the post here as well. There's a lot of information in there. And there's also the diagram that we're talking about as well as in there, because this will help people, especially those that don't really know what's going on, to go through this, which I want to do with you. I know we've been talking a lot about education over the last couple of weeks. I want to dive into the actual companies the next time we come on here, because all these elements that you're saying, you're able to say this openly on a Facebook Live with me because you strongly believe you have those elements. So I do want to get that coming in here as well and talking about that, because there's a lot of information to go through in this investor presentation, and I want to make sure that we get the chance to do that.
Yeah, no, it's a really good point. You should be able to take the investor presentation and you should be able to read through it and really get a sense of the company, their strategy, the team and their background, the project and where it is and the elements of infrastructure, all the pieces we're taking. that really should be something that it's great when you're sitting one-on-one with the CEO or the investor relations person, but you should be able to flip through it and really come away with a sense of, you know what, I see what they're doing, I see who they are, I see why they're approaching it this way, and it really should have a flow to it. And that's an important indicator of what you're looking at in the company. And if you don't come away with, well, I'm really not sure what they're doing, a call
Yeah.
to the CEO, a call to the company to say, hey, can you walk me through this is certainly called for. And you know what? If a company is worth their salt, they're going to want to take your call. They're going to want to talk to you about what they're doing and why they're doing it, and to be
Mm.
transparent in that way. And that's a really good stuff. These are people. They love what they do. It's a fun business. We like to share what we're doing. And if you're not getting that vibe that they're open to you as an individual investor, there's lots of other companies to move on to that you can
Yeah,
consider.
absolutely. Well, on that note, I do want us to spend our next time going through these things, diving into your actual companies, because we're running around the 45-minute mark here, so we're going to be cutting this one off for this evening. But every time you come on, I mean, I'm just staring at you and listening to this stuff because for myself, I'm learning a lot as I'm going, as I spent a lot of time in other sectors, and I haven't put a lot of time in the exploration and mining industry over the course of the last 6 months, but it's still
Yeah.
newer to me. So hearing these things, it's nice to hear the background. It's nice to know what you're looking for. It's nice to know where you are in the cycle. It's nice to know all these different things. Management team, the property. What are your findings? What are your grades? Do you have roads? Is the political, uh, you know, background or atmosphere good for what you're doing? And are they going to be behind you as you start digging and all these different things? So a lot of great things. And from what I know, speaking to you and what our investors will know very soon is that your group of management team have positioned yourselves with these two companies, soon to be three, in the coming months, to have all those elements. So I want to make sure that we dive into those. And that's when we can start taking a bunch of questions from different people as they're going on, because I want to get that story out there because I think it's very interesting. And I think this is a perfect time to begin looking for opportunities like the ones that you've been putting together.
Yeah, no, I think you summarized it well. It's a good time for investors to be looking at the space. Valuations, many of these companies are near their 52-week lows. So as contrast to technology and other things that are their peaks, these are attractive valuations. And so one can feel good about being able to go in the market. This is one of those rare times in their buying value, and it's an attractive point to be looking. And so I think going through these things we've been talking about in the last 45 minutes in terms of what are the things we should look for. And then next week, yeah, it'd be great. We can dive into a bit more on the specifics of what we're doing on our silver company and our platinum company and on our up and coming company. And I hope what we've kind of done is we've broadly introduced these, not specific to just these companies. Certainly we believe in what we're building, but to kind of give people the ability to understand how should I approach the mining industry and why should I be looking at it today and what the real value is here. And I think this is a really kind of, it's a fun industry. It's fun to learn about. It's an exciting industry to follow as the results are coming out. And I
Yes,
think,
absolutely.
what investors just need is a bit of understanding of what they should be looking for. So hopefully they can get those top 20% that make 80% of the discoveries and have a whole series of home runs to take home. And hopefully in the next couple of these that we do, we can kind of walk people through some of those more detailed elements, maybe a bit more on valuation, so we can start to give people some metrics they can use as they start to look at companies. And
Great.
then maybe at some point we even open it up for some questions for ask us anything kind of thing. So,
Yeah, no, and I'm excited for that. I'm excited for it. I love seeing comments like Brent's talking about, how you are educating him and how it's becoming exciting. Because once you start knowing a little bit about something, you're like, okay, this isn't as foreign anymore. Maybe I can learn about it. And, in our Discord chat rooms where after our last Facebook Live, as people tend to watch it throughout the evening, the next day, things like that, the amount of questions that came out and the amount of people who said, you know what, I've never heard that before. That's why I find these very valuable, both for myself, but for investors in our community and all of that. Why don't we aim for the next Facebook Live to start diving into your specific companies now that people are armed with a few things to think of, and you can start showing them why you believe that these are
that's right.
investments that they should be looking into.
Yeah, setting ourselves up for some tough questions, which we always like. So that's good.
There we go. There we go. Well, Greg, always a pleasure. I appreciate you coming on and look forward to our back and forth that we have throughout the week, but to our next Facebook Live where we dive into metallic minerals and Group 10 metals.
Great. All right. Well, thanks for having us. Have a good evening, everyone. And we'll, I guess we'll maybe set this up for next week.
Absolutely. Well, we'll talk soon, my good man. And again, thank you for your time.
Yep. Take care.
All right. Bye for tonight.